this is Andrew McNair from SWAN Capital with our educational economic update for October 2017. In this month's video, I'm going to discuss some major headlines that influence markets in September. And I'm also going to provide you some insight into what these developments might mean for you as an investor. Now, as always, please stay tuned at the end for required disclosure. So as we enter October, the third quarter of 2017 is now behind us. While we still have to wait to receive most of the quarterly data out there, one detail is very certain. Major indexes performed well between July and September. See, if you look at the S&P 500, the Dow, the NASDAQ, all their performance is positive last month and gained at least 3.9% for the quarter. And they are each up, if you look at every single one of them, 9% or more in 2017. So with all this growth, we have seen that indexes hit a number of record highs. And if you look at quarter's last trading day on September 29th was no different. Both the S&P 500, the NASDAQ closed with new records, with the NASDAQ reaching new heights for the 50th time this year. The Dow closed only 0.1% away from its record high and notched its 8th straight quarter of gains for the first time since 1997. So that's why you're seeing a lot of comparative to this being the second longest bull run in history. Now the S&P 500 also entered the quarter up for the 8th time in a row, and the NASDAQ had its 5th straight quarter of gains. So we've been in positive territory for a while now. However, between the recent weather disasters and geopolitical tension out there, last month's positive market performance might seem surprising to a lot of investors. But rather than mirroring this volatility, markets were relatively calm. In fact, the S&P 500 had its least volatile September in history. Now, we're going to look at what happened last month and what may be on the horizon. Now, right before the end of September, we received the final reading of gross domestic product, or GDP, which is basically a critical measurement of the economy's growth overall. And here's what the data showed. It showed 3.1% in growth for the second quarter of 2017. This reading is slightly beating expectation and indicates that the economy is growing faster than many people anticipated it would. Now, in addition, the latest readings of personal income and consumer spending increase. So that means more money for you and I. Now, if you look at the service sector, it also showed growth, with 15 of 18 industries in the non-manufacturing index having positive readings. And after struggling for years, corporate earnings actually seems to be back on solid ground, which is one of the topics we talked about in the state of the market. Now, last quarter marked the first time in 6 years that corporate earnings had 2 solid quarters in a row. However, the economy still has room for improvement. If you look at industrial production and retail sales, they both fell in their most recent reading, and there may be a lot to blame for that as we see a lot of disruptive technology. And if you look at the Fed's PCE, which is once again their preferred indicator for how they track inflation, it's far from the 2% rate that the Fed hopes to see. Nonetheless, the Fed has stated that it plans to raise interest rates 4 times before the end of 2018. If inflation remains low, they may have to rethink this plan altogether. One change that the Fed will be making is to begin lowering this massive balance sheet. See, during the Great Depression, or the recession, I should say, the Fed plunged trillions of dollars into the economy. The Fed now believes that the economy is finally able and strong enough to handle more normal monetary policy. So far, the markets haven't had a really strong reaction to this Fed's long-anticipated decision or threats of reversing its quantitative easing. But we will definitely continue to monitor this action, as well as a variety of other economic indicators, and see how that's going to affect the rest of 2017. Now, looking ahead, many potential changes are on the horizon, such as tax reform. And we're going to be studying how this policy or any economic update could affect markets as well as maybe your personal situation. For now, if you have any questions about the news you're seeing or want more guidance on balancing your finances, that's what we're here for you. So definitely schedule a review. Now that wraps up this month's economic update. If you have any questions, give us a call at 850-380-9558. Lastly, if you're a client, make sure you don't miss the movie night, which is coming up this weekend. Bring your lawn chairs. We'll have the 13-foot screen as well as the concessions. So that's it for this month's October economic update.